despite having an inflation rate lower than Australia's, the United States Federal Reserve overnight has continued its campaign of interest rate rises. Its 11th rate rise in 17 months. Our business editor Ross Greenwood joins me now. Ross, great to see you. This comes as our Reserve Bank is expected to keep rates on hold next week after a lower rate of inflation than expected.
Yeah, that's so true, Laura. This is a really conundrum for not only the central bank, but for people watching and trying to work out where interest rates are going to go in the future, because the United States is further down the track than what Australia is in regards to cooling inflation and also cooling its economy down as well. Here we seem to have been later to get there and also later in regards to it. So we can actually show you, here's the United States overnight with the additional interest rate rise of 0.25%, taking its cash rate to 5.5%, but that's well ahead of where its inflation rate is. Here in Australia, it's quite different. We have a cash rate which is still much lower than our inflation rate, which leads to suggest there's more work to be done, despite the fact there's clear evidence of inflation coming down. But anyway, let's go to Jerome Powell, the chair of the US Federal Reserve, overnight, just explaining why the United States went when many people expected it to hold.
We'd be comfortable cutting rates when we're comfortable cutting rates, and that won't be this year, I don't think. It would be, many people wrote down rate cuts for next year. I think the median was several for next year, and that's just going to be a judgment that we have to make then, a full year from now, and it'll be about how confident we are that inflation is in fact coming down to our 2% goal.
And Laura, that's kind of the same argument as we've got here in Australia. When does the Reserve Bank start to cut rates? Well, what you've got to see is the economy really slow down significantly before you start to even think about any interest rate cuts, which were expected late this year, but now probably late next year. Now, the interesting thing here is the expectation after that inflation rate came out yesterday of the Reserve Bank going again. It dropped from being well into the 40s, and you can now see here below 20%, really in the teens now, of a chance of a rate rise again when the Reserve Bank meets on Tuesday.
We know rate rises have a lag effect, and in the US, inflation is lower than Australia. So how do they justify this rate rise?
Well, that's the really important thing. They want to take no care, no certainty, if you like, that this inflation is going to disappear. But again, we'll show you what it looks like around the world right now, so you can understand exactly even where the Reserve Bank is going to grapple with this. Here's the United States. Have a look at this. You've got inflation there now sitting around about 3%, and you've also got a cash rate of 5.5%. So big difference, right? Here in Australia, you've got inflation, monthly inflation, at 5.4%, but a cash rate of 5.1%. So it's kind of like our inflation's higher than our cash rate is, and you'd like that to be the opposite to make certain. You can see many other parts of the world, New Zealand, say, for example, its inflation rate's still higher than its cash rate, but they're kind of equal. The UK's got big problems. We know its inflation rate has taken off. Canada's a good example. It's now got its inflation rate under its cash rate. So this really all Jerome Powell was saying about being absolutely certain that you kill this inflation stone dead.
Inflation has moderated somewhat since the middle of last year. Nonetheless, the process of getting inflation back down to 2% has a long way to go.
So were markets surprised, Ross?
They were surprised. Now, what happened there, we go and show you the Dow Jones index. It really flattened out because it was broadly expecting they'd be on hold. So you can see really there, it sort of went up and then down, and it really was a bit of a surprise in regards to where it went to. That's the Dow Jones, closed up by 82 points. It looked like it was going to be much, much higher. It fell when that decision came out. If we then go to the Australian dollar, I want to show you this because this is fascinating what's happened in the past day or so. So have a look on the left-hand side of that chart. That big fall is when our inflation rate came out yesterday. So the dollar falls if there's expectations that interest rates are not going to rise. But have a look at what happened overnight. As soon as that rate decision came out of the United States, bingo, straight up goes the Australian dollar, because then maybe, well, the punters are saying, well, maybe you're going to see an extra rate rise here in Australia. So Anna Rathbun is an analyst in the United States looking at the markets. Here's what she said about the market surprise.
The tone from the Federal Reserve was just as hawkish as it was in June. So, and that was actually a disappointment for the markets because we were expecting that potentially this could be the end of the hiking cycle and maybe a skip, maybe a pause forever, and then maybe cuts coming in the future. But that is not what we got today.